Hi folks, and welcome to the Financial Argument Channel. We'll really start to feel the crash this summer. It'll last for years. So today I'm going to discuss current statistics of several huge economies in order to show the reality of the economic situation we're facing, as the suffering of the last few months continues. Many people think that the worst financial times are over. They even seem pretty optimistic about the speed of economic recovery. What makes them so optimistic? The evidence I will show you in a moment reveals that the economy is not presenting any signs of recovery, not only in the USA, but throughout the world. Be prepared for a real collapse of the economy. What we've experienced so far was just the beginning. The financial system of today has had problems since the beginning because it was built on a faulty structure. The problems this structure has accumulated over the decades have created a bubble, and its explosion comes closer every day. Some of you may have noticed the latest rise in the stock markets. I did as well. However, this does not reflect reality. After central banks all over the globe printed huge amounts of money, investors started rejecting the idea of bankruptcy or debt without any logical explanation. Additionally, investors seem to think that central banks will save every company whenever it suffers from the current atmosphere by printing money. So investing in the stock market is the best and only option. Yet, this is not true, as financial markets cannot show the larger economic reality, so don't let Robinhood investors fool you. Yes, newbies invest in stocks using an application named Robinhood. Some say that the bubble growth is mainly because of them. Additionally, and more importantly, real sector data is crucial in analyzing what's going on. I'm going to give you some evidence to help you understand the current position. First, I should note that an economy is like a medallion with two sides. One side is the real economy, and the other side is the financial markets. And most importantly, the real economy is the base of finance as well. If there were no real sector, there wouldn't be any financial markets. Let's think about the opposite. What if there were no financial markets? Throughout most of history, humanity lived without financial markets, but with the real sector alone. Let's start with the data regarding the United States of America. One of the most important pieces of data from the real sector that provides a significant amount of information is wholesale trade sales. That said, the forecast for April 2020 was minus 4%. On June 9th, 2020, it was announced as minus 16.9%. which was way worse than expectations. We can also see a downward trend. The data showed it started decreasing in the month of February with minus 0.8% and continued in March at minus 5.2%. In addition, another area to examine for crucial information with respect to the real sector is retail sales data. U.S. retail sales was announced to be minus 16.4% in April. Just like wholesale trade sales, this negative trend started 2 months earlier. U.S. retail sales in March 2020 was negative 8.3%, and February 2020 was negative 0.4% according to the U.S. Census Bureau. Looking outside the United States to Germany, a country that used to have a solid trade surplus, statistics there plunged as well. For instance, German export data as of April 2020 was announced at minus 24%, but the forecast was minus 15.6%. The difference between the forecast and the announcement is obvious. Additionally, there is a downward trend in this statistic as well. Germany has suffered from hyperinflation before. It left a mark on German and world history. Therefore, Germans are very sensitive when it comes to their fiscal deficit, inflation, currency policies, and exports. Yet the real sector in Germany is now living its worst-case scenario, and the government is about to expand the fiscal deficit to 7% of the gross domestic product of the country, which is a stiff move by the ruling coalition of Chancellor Angela Merkel. The coalition has suspended its long-lasting commitment to fiscal prudence after many years of balanced budgets. As I previously noted, German stimulus packages exceeded $1 trillion in order to stimulate the economy. The German government even purchased several significant German companies to protect them from foreign takeovers while prices are so low. Let's continue with the United Kingdom, one of the wealthiest countries in the world. The British economy is in deep recession. The British economy shrank 20.4% in April. Data shows this is the biggest fall on record. Additionally, UK manufacturing production also plummeted 24.3%, way worse than the forecast minus 15.8%. UK retail sales are in a similar situation. Data for April 2020 shows that retail sales plunged 22.6%. We're seeing the same downward trend here as in other places. After these data were released, the Bank of England stated that it was ready to act. Ready to act how? Printing more money into the system? The huge southern countries of the European Union, Italy, Greece, Spain, and Portugal, have always had economic turbulence, and now the situation is no different. The Fantastic Four have struggled over the last few months, and they don't have enough budget to stimulate their economies. The southern European countries are in financial danger. Let's look at some stats. Italian industrial production, for instance, sank 42.5% in April, and the same data for March was minus 29.4%. Spain is no different. Retail sales in Spain fell 31.6%. These numbers are atrocious. Apart from country-based information, certain business sectors are also in great peril at the moment, one of which is the airline industry. Airline companies have been struggling since the beginning of this year. I presume that this situation will continue for at least 3 to 4 years. Warren Buffett also stated that he was wrong investing in the airline sector and sold almost all of his shares. Delta Airlines, for example, expects a near 90% record loss of income. This is why the company is in talks with its creditors in order to avoid defaulting on any relative payments. American Airlines is another example. The company stated that its sales dropped almost 95%. Lufthansa is the German giant of the airline industry. The company is also suffering for the same reasons, and announced that thousands of projects, jobs, and deals will be canceled soon. Almost 100 planes will be removed from its aircraft fleet as well. Emirates Airline is a Middle Eastern giant along with others such as Turkish Airlines, Qatar Airways, etc. Did you know that Emirates Airline fired thousands of pilots and cabin crews? Even pilots don't have job security nowadays. The sector is in deep trouble, and we only mentioned a few of the companies that have made headlines. At the same time, companies are trying to protect their rights as well. Several airlines in the UK, for instance, are planning to sue the UK government over the 2-week rule. This rule, newly entered into force, will be discussed in late June with respect to its effectiveness. Airline companies have no other recourse but to sue the government in the UK to find a remedy to their current financial obstacles. All in all, the world's wealthiest countries are experiencing significant economic hardships. It's not only the governments themselves, but giant companies are also facing financial hazards. Retail sales, wholesale, growth, prosperity, and employment are all seeing seriously negative trends. Companies are sacking their employees, canceling deals, postponing payments, and taking out loans, but they are still facing catastrophe. To overcome the current collapse, the only thing that financial institutions can do is print money and lower interest rates. This is the only option available to them, but interest rates are already near zero and trillions of dollars and other currencies have already been printed and entered the market. Please watch my previous video about deflation for more information. I give detailed information regarding money printing, etc. in that video. With all of this being said, the financial markets remain in an illusion of quantitative easing. In other words, the illusion of a debt bubble. As I previously stated, the real sector is the main part of the economy, and financial markets are just a reflection of it. Therefore, if the real economy is in danger, finances and the financial markets cannot and will not survive. Lastly, some of you asked why I heart each comment. It's to show you that I've read them and they're very useful for me. I want you to know that your ideas are taken into consideration. I might not always agree, but that doesn't mean they're any less important. Please leave your comments below if you have any suggestions. Thank you so much for all of your support for the Financial Argument Channel.